these are the key points that I've been using for 25 years. I think they're true then. I think they're true today. I think they'll be true in 25 years. And I think that's what investing, successful investing is all about. And the first point is know what you own. I can't believe how many people own stocks and they couldn't describe to an 11-year-old in 2 minutes or less why they own this thing or what it is. If you actually pin them down and you put a whip to them, they'd say the sucker's going up. That's the only reason they have for, and this is the normal kind of company that people buy. This is a very simple story. I own a lot of companies like this. They make a relatively mundane product. It's a 1 megabit SRAM CMOS bipolar RISC floating point data I/O array processor with an optimizing compiler, 16-bit dual port memory, Unix operating system, 4 Whetstone megaflop polysilicon emitter with a high bandwidth, that's important, 6 gigahertz double metallization communication protocol, asynchronous backward compatibility, peripheral bus architecture, 4-wave interleaved memory, token ring interchangeable backplane, and they do it in 15 nanoseconds of capability. Now, if you own a piece of shit like that, you will never make money, never. Somebody come up with more Whetstones, less Whetstones, big mega flop. I mean, what do you do if this thing goes from 12 to 9? Do you buy more? Do you walk around the block? I mean, do you call your friends? I mean, what the hell do you do with something like that? People buy this stuff. I mean, I buy stuff like Dunkin' Donuts and Stop and Shop and CVS and made money in all those. And Sally Mae was just here, right before me. I mean, there's a stock I bought that they had a great name. It was Student Loan Marketing. I mean, who would ever buy anything like that? It was a great name. If you heard the story, I think 100 people heard the story. In fact, I had dinner last night with Al Lord, Ed Fox, and Paul Carey. We're all in that roadshow in 1983. I think if 100 people looked at Sally Mae, they would have bought it, but 100 people wouldn't look at it. Because imagine loaning money to students. Imagine doing anything with students. And it was a great story. It was simple, and no one looked at it. So that's the kind of stocks I like to buy. But I'm telling you, people don't do this. And I'm talking sophisticated people, unsophisticated people. They don't know what the company is, what's the story. And it's very important to know it, because it doesn't always work, and you have to keep posted. Now, here's a big point. Remember this one. It's futile to predict the economy, interest rates, and stock market. I mean, people keep trying to do this. I mean, this would be useful. I would love to know when we're going to have a recession. I'd love to know when interest rates are going to go up or down. I'd love to know when the stock market's going up. That would be helpful. I would like to get next year's Wall Street Journal. Unfortunately, you don't get it. And I remember in 1982, we had a lot of people in this room around for 82. We had 20% prime rate, 15% long governments, double-digit unemployment, double-digit inflation. I don't remember anybody telling me about that in 1980. I remember anybody telling me about that in 1981. But in 83, I remember they said, well, the economy's bounced back. We're in a recession in 85. In 85, they said we have a recession in 86. In 87, something happened in October 87. I forget what something happened in October 87. Celtics lost 7 in a row. Something bad in 87. They said for sure we'll have a recession in 88. And they said 89 for sure we'll have a recession. And then 90, we're supposed to have the so-called soft landing, which we never had. So I've always said if you spend 13 minutes a year on economics, you've wasted 10 minutes. And all you need to know about the stock market is it goes up and it goes down, and it goes down a lot. And that's all you need to know. Again, it'd be terrific to know what's going to happen in the economy, but I deal with facts. If inventories are going up, if copper prices are going down, if room occupancy is going the wrong way, if people are building too many hotels, I look at freight car loadings when I own railroad stocks. I deal with facts. I don't deal with people tell me something's going to happen in the future. You might as well call the psychic hotline for that stuff to get a better average. You got plenty of time. This is true of Sally Mae, it's true of Dunkin' Donuts, it's true of Stop and Shop. People are so insistent, I'm that way too. I have to fight it. They have to buy a stock, let's see, it's now 501. I haven't found a stock yet today. I got to find a stock before sunset. You could buy Walmart 10 years after Walmart went public. Let's say you're a very careful investor. You waited. You said, I don't know if this company can make it. You waited for Walmart to roll it out. You could buy Walmart 10 years after they went public and made 30 times your money. 30 times your money. 10 years after they went public, they're only in 15% of the United States. 1.5. They hadn't saturated the 1.5. You could say, well, why can't they go to 17? Why can't they go to 19? I mean, why don't I take a leap of faith here? Why can't they go to 26? All they did for the next 3 decades was roll it out. You could buy Walmart. If the day they went public, you bought it, you would have made 500 times your money. If you waited 10 years in Walmart, you made 30 times your money. You got plenty of time in this business. Now, what I'd like to talk about is what I call the 10 most dangerous things people say about stocks. Here's a good one. If it's gone down this much already, it can't go any lower. I remember when Polaroid went from 140 to about 107, and people said, if you ever get Polaroid under 100, you've got to buy it. You just back up the truck, buy the stock. You know. Stock could get to 110, then rally, fall to 103, you go 112, go 105. They said, gets under 100, buy Polaroid. Polaroid broke 100, people started buying it, and within 9 months, the stock was 18. I saw the same thing with Avon Products. So just saying, it's gone down this far, how much lower? I mean, it's crazy, but, it can keep going. In fact, I tried this out. Kaiser Industries, I was a new analyst at Fidelity, and we were about to buy the biggest block ever at Kaiser Industries. The stock had gone from 29 to 17. We're about to buy the largest block ever in the history of the American Stock Exchange. We bought, 10 or 15 million shares. At 15 3/4, I said, my God, the stock's gone from 29 to 17. How much lower can it go? So we bought this enormous block at 15 3/4. So I called my mother and I said, Mom, I guess stock at Kaiser Industries, it's 10. So about 3 months later, I said, you ought to buy this. It's gone from 29 to 10. How much lower can it go? Well, it went to 9, it went to 8, it went to 7, it went to 6, it went to 5, it went to 4. Now, fortunately for me, this happened very rapidly, or I'd be working at the Stop and Shop bagging behind the lines instead of Fidelity. So fortunately, this was compressed in only about 6 months. So I had to go to the fund manager and say, I was a little bit early on this at 15 3/4, but we call this premature in the business. Had a correction, which is a euphemism for losing a lot of money rapidly. So I said, let's check this again. The stock's 4. They own 45% of Kaiser Aluminum. They own 59% of Kaiser Steel. They own 38% of Kaiser Cement. They own all of Kaiser Electronics, all of Kaiser Broadcasting, which had 7 TV sets. They own Jeep. They had Kaiser Fiberglass. I said about Kaiser Sand and Gravel. They had a bunch of other Kaisers, and they had no debt. Now, in this room, because I know Freeman Billings is very interested in financial stocks, no one's ever gone bankrupt without any debt. Now, that would take I think you have to give some kind of distinguished service award to somebody who did that. But they had no debt, and I said, it's not going to go to 0. I was wrong when I said it can't go below 15. So we hung on, and within 3 years, they gave out the shares in Kaiser Steel, gave out the shares in Kaiser Cement, gave out the shares in Kaiser Steel and Aluminum, and they sold off all the businesses. You got about $55 a share. But if you didn't know the story, and the stock went from 15 to 11, and you're just saying how much lower can it go, when it went to 9, went to 8, you would have gone. So you can't just say it can't go any lower, because I saw Taco Bell go from 14 to 1 in 1974, and they had no debt and making 60 cents a share. There's a corollary to that that's even more dangerous. If it's gone this high already, how can it possibly go lower? Higher, sorry. Philip Morris, adjusted for splits, sold for 12 cents in 1951. And then it goes to 60 cents in 1961. So it goes up 5-fold, and you say to yourself, how much, it never sold for that, but just for splits. You say, how much higher can this go? It's gone up 5-fold. They missed the power of Marlboro. They missed there's 220 countries in the world. They missed the cash flow of the company. They missed everything. This stock was a 100-bagger after going up 5-fold. But people sold it just saying, how much higher can it go? Can't go any higher. They did the same at Home Depot. They did the same with Toys R Us. I did the same thing at Toys R Us. Just saying it can't go any higher, it's gone this much already, that's very dangerous, and don't use that one. And it's a very bad thing to do. Eventually, they always come back. Here's another one that sucks. That's a technical stock market term we just use only in the stock market. The RCA just about got back to its 1929 price, was backed out by GE. Manville never came back. International Harvester, even with its name changed and adjusted for splits, hasn't got all the way back yet. Western Union. Double knits, remember those wonderful things? Floppy disks. They don't have to come back. But they say eventually they always come back. Not true. Here's a great one. It's $3. How much can I lose? This is a great one. Because get out. I don't have a computer and I can't do high-level math, but just do this one. So let's say your neighbor buys $10,000 of a stock at 50. the stock's now 3, and you put $25,000 in at 3, if it goes to 0, who loses the most? A lot of people cannot answer this question, you know. I mean, if you put $1 billion in at 3, you can lose $1 billion, you know. I mean, they blow taps in lots of companies every year, you know, you just have, they can go to 0. Here's a good one that helped me a lot. It's always darkest before the dawn. This business is terrible, it's awful. You ought to buy the group. This is not a good way of making money. Here's one you're probably talking about before lunch, freight car deliveries. In 1979, there was 96,000 freight cars delivered in the United States. 2 years later, it fell to 45,000, the lowest in 23 years. So it goes from 96,000 to 45,000. People say business is awful, it's horrible, pathetic. Then it falls to 25,000. They say, just load up. There's about 15 opportunities to lose money here. There's about 15 suppliers of freight cars, 15 manufacturers. Business was awful. Well, last year we shipped 7,000 freight cars in the United States. The business just continued to be miserable. And I'll give you one there's even greater opportunity to lose money on. Energy services industry. This, we all had a great opportunity to get our heads handed to us. In 1982, there was 11,000 of those oil rigs drilling those holes all over Oklahoma and Texas and Colorado. We used to have the rig count every week. And the rig count fell from 11,000 in 82 to 6,000 in 83. Then it fell a little bit lower in 84. And there's hundreds and hundreds of companies here. Companies that made the muds and did the downhole stuff, the fracturing companies, the well companies, all the measurement companies, the Schlumbergers, the bid companies. Lots of opportunities to lose money here. There's an equal opportunity here for serious losses. And the people said, listen, the business is terrible, let's buy these groups. Well, the rig count was only 1,000 3 years ago. So it went from 11,000 to 6,000 to 5,000, then 8 years later it was under 1,000. The industry really started to turn about 2 years ago. So just saying the business can't get worse. I was lucky enough, in addition to having the metals industry when I started Fidelity, I had the textile industry, which is a great group to follow. Because you follow companies like J.P. Stevens, was founded in the 18th century, and West Point Pepperell was founded in the 18th century. Burlington Industries was one of the new companies that was founded in 1904. These people have been through recessions, depressions, world wars. They've seen it all. There's a great expression in the textile industry. It's always darkest before pitch black. Now that's a good one to remember, because when business is terrible, it can get considerably terrible. It can get terrible to the power of 6. And I love those numbers on freight car deliveries. You ever watch, I love the show Jeopardy. You ever watch Jeopardy and people come out, they will know those numbers. Remember, they'll know the numbers. And they'll know, you know, what country Box took his first vacation in, and they'll know Phil Rizzuto's batting average and what his wife's first name was, and they'll know the stock symbols of Xerox before it was Haloid, or, you know, they know everything. And you watch the show and you feel like an absolute idiot watching the show, because they answer all these questions. But they're really smart. I've owned this stock before, King World. Right after it, they show Wheel of Fortune. And what happens is they'll have this word up there, and it'll be TH, and there's a T, and it's, I buy a vowel here, I buy a U, you know, buy an I, and you know, Vanna spins the wheel, and they buy the A, and, you know, you're redeemed by watching the Wheel of Fortune after, you feel like an absolute jerk on the Jeopardy game, and it's really smart. When I rebound to 10, I'll sell. Here's a great rule. Somebody buys a stock at 10, and it falls to 6. They say, if it gets back to 10, I'll sell. Now, I think the math, 4 and 6, I can handle this level of math. I think that's about a 66% return. You ought to buy it. If you think it's going back to 10, you ought to buy the hell out of the damn thing. But they think if it gets back to 10, I'll sell. Now, what you ought to do is never put down a round number, because I think for the next 26 years, this stock will go between 5 and 9 1/4. It'll never get to 10. So maybe put 9 1/8 or 8 3/4. But just saying the stock, if it gets back what I paid for it, this is a very important rule. This is one of the key rules. The stock doesn't know you own it.